Hey guys, welcome back to another video. Today we'll be taking a look at Cenntro Electric Group. So as always, starting off with the overview and looking at the PE ratio. So they currently do not have a PE ratio. So when a company doesn't have a PE, it means that the company has been doing nothing but losing money. So first off, this is a red flag right away. And why would you invest into a company that is losing money? That's the question you have to figure out. So now seeing if they offer any dividends, they do not. So they're already losing money, so I don't see why they would even be financially capable of issuing dividends, which is probably the case. Getting into the income statement now, we're going to look at the revenue. So overall the revenue's up over 50 million from 5 years ago, which is great to see. They made a big jump in 2019, which clearly wasn't sustainable since they made a lot less the next 2 years. Overall, I do like the signs for potential revenue growth in the future. Now, taking a look at their net income, it's definitely not unexpected for this to be completely negative across the board since they do not have a PE ratio. The last thing to look at on the income statement is the basic shares outstanding. So this is something you want to see decrease. The more it goes up, the less your shares are worth. And as you can see, it's looking rough. They were slowly increasing their shares from 2017 to 2020. Then in 2021, they made this jump up to 109 million, which from a fundamental point of view is a huge red flag. If you wanted to see it in the eyes of a speculative investor, it's a 50-50 since this is a way to raise capital for smaller growing companies. Moving into the balance sheet now, we're going to start off with the current assets. So the current asset growth looks good as they brought this up to 83 million, which is a crazy increase of 2,215% from 5 years ago. Now, with the current liabilities, on the other hand, as of 2021, they're at 37 million, which is very cool to see that they have 46 million more current assets than current liabilities. The last and one of the most important aspects to look at in any company is the free cash flow. Cash flow is important because companies that have a lot of money on hand have the advantage of being able to pay off any debt, invest into future growth, or pay dividends. So this is clearly something you need to be improved on year after year. As you can see, it's not looking good. Cenntro is a smaller growing company, so I honestly didn't have my hopes up going into this anyways. All we can hope for is as this company gets more established, this will look better in the future. In conclusion, Cenntro really isn't too bad of a company. Their income statement is probably the worst part in my opinion, but I don't think it's anything that can't be fixed as they continue to grow. I would also hope to see the cash flow issues get fixed too. If you wanted to buy the stock, I would just put your money in with the price it is right now and ride it out and see if anything happens. This company definitely has potential, both the States and right now, I have other places I would rather put my extra money. Two things I want to mention before I end the video is my trading strategy is centered around finding value in a company. If I don't see consistent growth in most or all the categories I cover, then I tend to stay away. Secondly, I also want to point out that I'm not a financial advisor. I'm just a guy speaking my opinion on stuff on YouTube, so I highly recommend doing more research before coming to the conclusion of buying or selling any stock that I talk about. If you guys have any companies you want me to take a look at, feel free to comment them down below. Otherwise, thank you guys for watching and have a nice day.